My name is Anita Majors. In my experience as a tax preparer and an IRS e-file provider, I've assisted clients in filing thousands of income tax returns. This year, 2016, millions of taxpayers have received new forms as part of their reporting for the Affordable Care Act. The new forms 1095B and 1095C are used to report the essential minimal health care coverage beginning tax year 2015. These two tax reporting documents detail information needed to confirm health care coverage for taxpayers, their dependents, and spouse on this year's tax return. According to the Affordable Care Act, in 2015, most Americans are required to have health insurance coverage or pay a tax penalty. This provision is called the Shared Responsibility Tax and is reported on federal tax forms 1040, 1040A, and 1040EZ. However, there are exceptions to the rule. Here's how you may be able to avoid paying a health care tax penalty. Hello, taxpayers. The individual shared responsibility provision requires you and each member of your family to have basic health insurance coverage, qualify for an exemption, or make an individual shared responsibility payment when you file your federal income tax return. How you get the exemption depends upon the type of exemption for which you are eligible. You can obtain some exemptions only from the marketplace in the area where you live, others only from the IRS, and even others from either the marketplace or the IRS. See publication 5172, Facts about Health Coverage Exemptions. Here are types of exemptions available and whether they must be granted by the marketplace, claimed on an income tax return filed with the IRS, or either may be granted by the marketplace or claimed on the tax return. You can claim your hardship on the tax return if your gross income is below the filing threshold. To find out if you are required to file a tax return, use the Interactive Tax Assistant at irs.gov. You can claim your hardship on a tax return if two or more members' cost or self-only employer-sponsored coverage exceeds 8% of the household income, as does the cost of any available employer-sponsored coverage for the entire family. You can claim your hardship on the tax return if you purchased insurance through the marketplace during the initial enrollment period, but have a coverage gap at the beginning of 2014. The exemption may be granted by the marketplace or claimed on your tax return if you are an American Indian, Alaska Native, or spouse or descendant who is eligible for services through an Indian healthcare provider. The exemptions granted by the marketplace only include you experience circumstances that prevented you from obtaining coverage under a qualified health plan, including but not limited to homelessness, eviction, foreclosure, domestic violence, death of a close family member, and unpaid medical bills. Exemptions may also be granted by the marketplace only if you do not have access to affordable coverage based on your projected household income, if you are ineligible for Medicaid solely because your state does not participate in the Medicaid expansion under the Affordable Care Act. Also, you may be granted an exemption from the marketplace only if you have notified that your health insurance policy will not be renewed and you consider the other plans available as unaffordable. For additional information about how to get exemptions that may be granted by the marketplace, visit healthcare.gov/exemptions.